Okay, let's get started. So hello everyone and welcome to another technical analysis webinar with Trevor Neil. Thank you for joining us as always. We'll aim to get through everything in approximately 30 minutes. Last week we overshot by about 15 minutes, maybe even 20. So this week we'll have a bit more focus on certain markets and less focus on others. If you have any questions for Trevor, don't be shy. You can ask them in the questions tab of your GoToWebinar window and I'll pass those on to him. We'd like to remind you that this webinar is posted to our YouTube channel in a couple of hours' time. So if you'd like to watch it again, you can do so there. And we also like you to subscribe to our channel and click on the bell to get notified. The webinar handouts can be downloaded in the handouts tab of your GoToWebinar window. So if you have any problems, please let me know and I'll direct you to them and help you download them. The first is a guide to different indicators that Trevor talks about during the webinar, and the second is a CFD guide which details all the products we offer at FX Choice. If you're watching this on YouTube, the handouts are available in the description box. There should be little links there so you can download them. For those of you who don't know Trevor, he has over 40 years experience as a technical analyst and trader, and was global head of technical analysis at Bloomberg. So we're in experienced hands. So Trevor, over to you.
Okay, thanks very much, Dan. And just checking, can you see my relative rotation graphs of the G10 currencies?
Yes.
Okay.
Mm-hmm.
All right. Today we're going to talk about these relative rotation graphs, which I've shown a couple of times, but not really had the opportunity to explain properly. They're very, very useful charts. You can see them yourself for free, and they are a type of chart which are used by institutional traders. They're available on Bloomberg and on Refinitiv's Icon, so these professional platforms. But it shows a very clear picture of how, in this case, currencies relate to the US dollar, and we'll look at it again. We'll look at cryptocurrencies versus the US dollars separately. So let me just explain what you're seeing here. Obviously, we've got the G10 currencies here. We've got a scattergram, and the scattergram has got tails on it. So just to explain what the X and the Y axis is, the X axis here, this horizontal axis, the vertical line here is 100. In the middle is the US dollar. And you see it goes 100, 101, 102. This means the further to the right you are, the stronger the thing is compared to the thing in the middle, which is in this case the US dollar. So the strongest currency versus the dollar of the G10 currencies, the one that's furthest to the right, is cable, is sterling, is the pound. Next is the Australian dollar, then the New Zealand dollar, then the Canadian dollar, and then the Norwegian crown. Euro is weaker than the US dollar. And this is very good to see this, because what do we see? We see the movement in the dollar, substantial move up in the dollar, but things are reacting to it in different ways. The one that is worse is surprisingly the Swiss franc is the weakest currency of the G10 versus the US dollar. Now, what's particularly interesting about this chart is the vertical axis. So this is the Y-axis here. Anything that's above 100 here means has got positive momentum. So it's, for example, if it's in this quadrant here, and you can see there's nothing in this quadrant here, it means that the currency is outperforming with positive momentum, means likely to go further. Here in this quadrant, which we call the weakening quadrant, as opposed to the leading quadrant, this is currencies which are outperforming, because they're right of 100, but with declining positive momentum. So they're weakening. So the outperformance is weakening. In this lower left-hand quadrant, called the lagging quadrant, this is the worst of all, underperforming, but without positive momentum. That's the Swiss franc there, the yen, and the Swedish crown. And then here we've got nothing in this one, and which is called the improving quadrant, which would be underperforming on a relative basis, but with positive momentum, and there's nothing currently in that. So this would be the things which were coming up and potentially going to be the next leading, taking over from pound, for example. Now these have got tails, as you see, and this is because the sampling here is daily. This is the pound on Friday. It's updated to Friday, Thursday, Wednesday, Tuesday, Monday, Friday, and so forth, going back for that number of samples. And what the point of this is to, as chartists, is to show us the direction. So the things do rotate. There's no permanent state for all these securities. So what we've got is we've got these these currencies outperforming the dollar, but weakening, but still outperforming, but weakening in that outperformance. Not too dangerous here, but the Norwegian crown, I think I know where it's going to be next week. I knew last week, we mentioned this last week, where the euro might be next week, and here it is here now. And so these ones, no real danger here of being long of these ones. And the best things to pair them off against, what do you think? Japanese yen, the Swiss franc. And so to get the best bang for your buck, it's not to go to the buck, but go beyond it to the weaker things which are weaker than the dollar itself. So this is a very good way of visualizing, setting up pairs and understanding charts where you've got things which are looking good versus the dollar, but which is better. You can't really see that from the chart, looking one chart after the other, but here you can see it all together. So you can see this complete picture. One final thing to say is anything which is sitting near the cross, like the euro is here, is moving with the benchmark, in which case the dollar. So the euro is moving with the dollar itself. As the dollar goes up, dollar goes down, the euro does the same. Things that are away from zero, like the Swiss franc here, the further away they are from zero, the more you've got the outperformance characteristic, and it's moving less with the base benchmark, but it's generating, to use the proper word, alpha. It's outperforming, genuinely outperforming rather than moving with. So I hope that's clear. We'll come back to this again, but we'll populate it the next time with the US dollar in the middle and put cryptocurrencies around it. So which is the best cryptocurrency? We can answer this question using this. So now I'm going to go back to, hopefully, my hope you can see now, Dan, can you just confirm that we've switched back to the euro?
We're seeing that.
Yeah, this the dollar has shot up, made a strong break to the upside. Really, the impetus for that has been the jolt in US interest rates going up through what votes. This has really shocked the market and is a big jolt to the market and causing much concern in the stock market, but of course in the currency markets, but to different extents, as we've seen here in that in the RRG chart. That's causing them to turn around as they are now, weaken versus the dollar, but some of them are weakening less than others. But the important thing to realize is that we've got a major bottom in place for the US dollar, which was formed over January, and we've broken significant downtrend lines in the dollar basket itself. So a year-long move, all of last year of weakening dollar has been broken. And so we've got this change going on now. So here we see it in the euro, and the euro is suffering. Here it's moving down here and moving down towards support, which is from this consolidation back at the second half of 2020, and it's pulled back very hard here. Now going to the daily chart, here's the breakdown that we've seen. I measured from here to here and projected down, so done a Fibonacci A, B, C, D move, and this would take us to here on it. But I think that we have got this big minimum price objective beyond the 100%, the 118.42 level, down to the 161.8%, which is at 16, because going back to the weekly chart, this takes us right back down to here. So I think we're in a big move down here, which is going to extend much further. And this I had talked about last week as a bearish flag, and this is the flagpole, and the minimum price objective from the flagpole is the 161.8 level, which is right down at 116. The shorter term technicals are continuing to go on. So remember where that was, pound was in the RRG. Pound was furthest to the right. So we're going to see a different chart here. And let's go to the weekly chart, start with the weekly chart of the pound. Hopefully that's going to come up. Here it is. Now, I want to remind you here that we're tackling this very significant 2000 strongly into it, and then rejected it the week before last, and now it's pulled back. But just look at this big picture chart. We've got this move, I think, from the October 2020 low up to here, A, B, pull back to C, measuring up from there gives us a D of 146, and that is my objective through the double top here. But we've always said there is significant resistance to breach, and the resistance has come in at the double top as expected, and the market moved violently back from that. So let's look at that violent move. That's the violent move there. So when is it over? I do think the pound is bullish, and that we will resume the rise and the long-term rise there. But we have pulled back over the last couple of weeks, and but where is it going to stop? Well, we've come back on this move from here to here, from the February low up to the February high. We've come back 61.8 towards support. Centered on the January consolidation here. I would normally give that a cigar. I think I will give that a cigar now. You know, those of you who remember when I give a consolidation a cigar, it's a cigar-shaped consolidation support level in this case, because the price is above it. So we're approaching that level. If it's going to stop, this will be a good place for it to stop. The RSI, as you can see, has gone deeply down here. It hasn't turned up or anything like that. There's no indication yet that the market is starting to turn up. But if it's going to turn up, there's a very good place for it to turn up from. 61.8 above the cigar, and with the RSI at a deep level. So as the week goes on, I'm hoping to see this RSI turn up, and that be the pullback. And if you're a swing trader, the opportunity to get into a trade at a lower level in the longer term uptrend. Now, to further make the point that we've seen from the RRG chart is to look at the British pound versus the euro. So we've got the euro with the dollar, and then we've got the British pound over to the right. And look at that, you can see this very, very clearly here. So this is the weekly chart of the euro, of the sterling versus the euro. Rising here is sterling outperforming the euro further to the right than the euro and the dollar, and it's powering ahead here and towards this double top that it's got to face, and probably it will exert some resistance there too. I've got that as my 100% level which I drew from this move here, A, B, C, and then 100% would be here at this double top. So up to just below 118, 117.60 area is where the resistance comes in. The technicals, you can see, are extremely strong, definitely overstretched, but extremely strong at this point. No divergence, still pointing upwards. So the trend is strong into headwind from that double top and Fibonacci objective. We had this severe dip here the week before last, and then it came out of it very, very well. For me personally, I was disappointed that the RSI didn't go below 50, because that's my trigger for the swing trade, and so disappointingly I didn't catch this one here, but that was the dip in the long-term uptrend, and we pulled back around about 38.2. We're on our way up again. A mild pullback, a weak pullback like 38.2 is bullish for the market. So I do think that we're ready to move through short-term resistance at 116.40 and the spike high at back at 118. So the indicators are bullish but stretch, and I think that we will continue higher in this this pair, this cross pair between GBP and the euro. Let's move now to the Australian dollar. Now we've got a commodities boom. This is one of the drivers, main features of the market at the moment, that interest rate going through 1.5% and the commodity boom that's going on. There's one notable exception. There's one commodity which is not participating in the boom at all. That's true, not true, there's more than one, but there's one notable exception to that. Now the Australian dollar here on the weekly chart is you know, we're in this uptrend here. We've had one pullback. We're having another pullback here to 38.2% of this. If it holds, that's you know, is a sign of strength in the market. But we will have to see. We've got also a double top on here back in 2018, which is resistance, and we punched into it. We recognize this previously. My cigar has moved, incidentally. That's where it was, should be, and we had seen that literally years ahead of time. So no surprise that it did pull back at that level. So here is the pullback here, and we pull back quite hard. We pull back through 61.8. So when it does that, that is a significant weakening of the trend. The bears are gaining strength here, and the technicals have turned quite ugly, actually, in the shorter term here now. And so we are quite wary of this now, and certainly we're concerned that 75.50 must hold here, because the chart will deteriorate substantially if that level gives way. But and at the moment it's moving down. So this has been a great one to participate in the commodities boom, but you know, maybe it's been ahead of the commodities themselves. I go to the New Zealand dollar, the close relative, similar chart here, but not exactly the same, and maybe presenting a different opportunity here. So here's the advance here. I did an A, B, C move here, and then now I've measured from the C point up to the high here, which this is not a double top here. We had this really head and shoulders top, didn't we? Don't know why what's happened here. So here we are back. My cigar is back in the right place here. Shoulder, head, shoulder, neckline breakdown, and boy, did it break down. Again, it's a multi-year fall. But we've now recovered strongly into this consolidation area, deep into it. So no resistance, no surprise that there was a resistance there. We always knew it was there, and we weren't surprised to see it stall there, even though it had a lot of power into that high. But on the weekly chart, things again here have deteriorated substantially. We've got a bearish divergence in the weekly RSI, high, lower high. The MACD has already crossed here. This has really deteriorated quite a lot here, and we're challenging this short term. This is now back to the daily chart. Support is really under threat. Here, the 90 area here, that must hold. Otherwise, we could have quite a fall. And this would take the market by surprise. It's quite a crowded trade being long these currencies. They've had a good run, but they definitely look. Now, moving on to Bitcoin. And now, before we go to the rotation graph, so I'm going to switch now to the crypto relative rotation graph. So just to remind you, here we've got in the middle the US dollar. Everything to the right of the US dollar would be stronger than the US dollar. Now, don't forget the dollar is strong. And here we've got the currencies all to the left and all in the lagging quadrant and not having yet moved into the improving quadrant. So unusually, and for the first time for months, you'd be better off being in the dollar than in cryptocurrencies. Bitcoin has got the is closest to the dollar, so if you like, it's underperforming least. And then we've got Ripple and Litecoin and Ethereum over here. So bear that in mind, that we've got markets which have turned round. We watched it happen here. Here's all last week and the week before, because fairly clear where it was headed, wasn't it? Before you got here, where we were heading. We were heading southwest, losing relative outperformance and relative momentum. It really did tell us that this was likely to happen, and it has now happened. So let's look at each one and see whether it's going to likely turn right back up and head back up into here, which is where we want to see them all. We want to see them outperforming the US dollar. Okay, so here's Bitcoin firstly. I'm going to go to the weekly chart just to remind us what a incredible market that we've got here. I've kept in here literally for years this Fibonacci projection starting from the beginning and going to B, which is here. Don't know why all these have moved. What's happened here? I have to redraw those. I don't know why they've moved, but projecting up to D, and D was at 261.8. I think that is correct still. Sorry, D plus was at was there. D, the 100% level we sailed through. Sorry, these have moved, and I need to move them back into place correctly because my labeling is incorrect. But 261.8, that's amazing, isn't it, that it should manage to do that. You know, when we go through 100%, we often go to 161.8, but you don't often see 261.8. But do you ever see 423.6? You will in a moment. So going to the daily chart now. So we hit the high in February. We pulled back 50%, almost exactly 50%, stabilized there. This for me was beautiful as a swing type trader. We got a strong uptrend. We had a pullback. The pullback was the strongest pullback that we've had since the one back in January. Once again, we came down. I put a circle around it because it went down below my trigger level and then turned up through it on this bar here. And this hopefully is the swing, which will be the next swing. So we've got, A, B, C, D, then again A, B, C, D here, and move on up through this high here, 58,100 high and onwards. I hope so. The only thing that worries me is that it hasn't shot up. So here, for example, it really gained momentum when it had its pullback, and this is rather a soggy sort of move, an unenthusiastic move. I'm a bit worried about that. It's kind of going up, but it's not really going up with the kind of enthusiasm that you would hope as the trend reasserts itself. So I would rather see a move like that than this one here. We've got black and white candles, so I'm a bit worried about it, but structurally the trade is still good. Then going to Ethereum. Again, look at the weekly chart here, and thank goodness the labels are still intact here. No, they're not. Very unkind of them. Actually, let's draw this again. Sorry, rather than try and move it into place. I'm obviously not paying enough for my system. So we've got, just by the way, this pullback is 38.2. Okay, just so that you know that from the high, just over 38.2. But what I want to do is measure from here to here and project up here. So we've gone through all these resistance levels and powered ahead, beating everything to infinity and beyond. We've had a 38.2% pullback in Ethereum, a hard pullback in it. So here it is here, measuring from this low rather than that low there. It's a 61.8% pullback, which is, you know, quite a pullback, powerful pullback in the context of a bull market. It came back to here. We have a cigar consolidation here, so it found its footing here. The RSI went down below my trigger level down here. It's turned up here. I'm going to move that little circle a bit further to the right because it was actually further to the right that happened. There on that candle there. And so hopefully that is the pullback complete, reversal in place, on our way back up again, RSI putting up nicely. Now the MACD is also across this, and it's looking good for a resumption of another swing through the high and beyond. So we're in a very strong reaction, which looks as though it might be completing, and I'm looking for the RRG charts to swing round into that top left hand when I show it to you next week. And now to Litecoin. Again, looking at the weekly chart here, and got all sorts of stupid lines here. Don't know what's going on here. There. And so we've got, once again, we have a market which has pulled back. Let me just show you more history of this. So we can do the measurement from the beginning. I'm doing a projection measurement. We've got a good from here to pull back here, 100%, 161.8. And look at this one here. This has taken us to 261.8, where if anybody could have done that measurement there, A, B, C, it's, you know, 2020 low. C, where's CD? CD is the length of AB added to C. That took us there, which was the previous high. We consolidated there, then break and surged ahead, touched the 161.8% level at 107, pulled back hard from it, then burst through it and went straight to the next one. You notice how when we break one level, we go straight to the next one there. And now we pull back hard from that and come back nearly to the 80 level, which would have been the 100% level and the previous high here. It didn't quite do it, so that's a bit bullish that it did do that. And I'm going to measure the retracement that we just had. It's going to make it a little bit crowded, but from here to here, and that is exactly 61.8% retracement of that advance there. Now, we haven't pulled back the RSI even to 50%. The MACD remains bullish. The weekly MACD remains bullish. So despite this savage sell-off here, the longer term picture remains very strong. Here is the pullback, that savage pullback into this consolidation here, which deserves a cigar. Should have had one already here. So we came back to it at the 155 area here. And I'll just do that retracement measurement that I did before, just to show you it again on the daily chart here. Came back 61.8, and then taking the RSI down below my trigger level here, and this circle should be here. And there's another one there, in fact. So this was the pullback complete and the reversal in the direction of the long-term trend, in the direction of the weekly MACD, and we have turned up since then. But I'm a little bit worried that this is a bit of a weak move out of the pullback. Look here, when we had this pullback, We had a strong move out of it here. We're not really having that strong move. So I'm a little bit concerned that there isn't more enthusiasm at this point, and the fact that this sell-off was so deep. So of the three, if you wanted to choose one of the three, this the Bitcoin has the best pattern. Okay, I don't want to overrun, but I've got one
Actually, Trevor, we've got a question, if you don't mind. Can you hear me?
Yes, that's okay.
Yeah, we've got a question from Mark O'Connor. Thanks very much for your question, Mark. He says, "Hi Dan, hi Dan and Trevor, I should say. Does GBP Australian dollar and GBP New Zealand dollar have enough bullish momentum to take them to the $2 level this year?"
Right, I need to put those charts up. So GDP, did you say
Aussie,
Canadian or
Aussie and
Australian?
Kiwi versus GBP.
Okay, let me just make that chart.
Is this not one you look at very often, or is it?
No, I have a short list for you.
Oh, I see.
If you want, here we've got.
That's it. That's Australian dollar USD.
List.
So we wanted GBP or Aussie dollar.
Okay. So, no, here it is. Sorry, I made it. It just hadn't come up on the chart. Just bear with me a second because that's to load in the data. And then he asked, I don't think he, well, you mentioned two, but it's not two.
Yeah, one sec. I'll just reread it. Does GBP Aussie and GBP Kiwi have enough bullish momentum to take them to the $2 level this year? Well, I'm assuming he means two.
Yeah, I've made a mistake. I put it around the wrong way. Unavailable.
Oh dear. If it's gonna.
No, let's do it again. GBP AUD equals.
He doesn't want to.
Oh, I can give it a good smack.
There it is. It responded to the smack.
Yeah, it did. Okay, so here's the weekly chart, and the question was, is it got enough power to go to 2? This is a really good question, actually. Thank you for that. So I'm just going to bring in a bit more data to see the significance of 2, which is right up here, and I'll bring it up. And yes, indeed, here's 2 up here. This is the equivalent of the double top that we've been talking in the other markets. And so we had this consolidation, made that high, and now we're in this big base pattern here. And so these are weekly chart. The MACD is positive, the RSI is going up. We are pushing towards a resistance of 181. This is the resistance from the beginning of the month. I have to award a cigar here, unfortunately, ahead of us in here, and then another one up there. Okay, so we got resistance ahead. Of course, this market fell a lot, so there's a lot of resistance over many years. So there's resistance to get through, but it's looking strong. So how far is it going to go? I think it's certainly it's going to push into this resistance here. It's quite strong, that resistance. This is weaker. This one here is a smaller cigar here. So if it gets through that one, it probably have less trouble getting through that one. It's got upward momentum. The momentum is strong. And before I leave the weekly chart, let's look bullishly at it, and we'll do Fibonacci projection. I'll start here, and I'll go here to here, and 182, 186 up here. Now let's go to the daily chart. Sorry, that is the daily chart. Oh, what was I doing? Yeah, so that is the daily chart. So we've got those resistances there and there. I want to go to the weekly chart. Oh, so here's 2. Here's the significance of 2. Sorry, I was showing you the wrong chart before. Very significant level, big round number, obviously. So has it got the power to get there? I don't know. That's a long, long way away. And it's bullish. It does look as though we've got a bottom in place. I do agree with that. A significant bottom in place. Here's the bullish divergence here. I'm sorry, I was talking nonsense earlier. Wasn't quite, that was wrong. MACD is positive. We've got the bullish divergence in place here, telling us that this is a significant low. We're coming up nicely, but we've got resistance ahead, which we are seeing here. Resistance, shorter term resistance, but significant from November last year, and then the October-November highs in here. So honestly, was it Mark? I think I can't really see that far ahead. 2 is a long lot between here and 2. I'd love to say that it's going to go to 2, but if it breaks through the high here at 185, then it could have quite an easy run up from there, because this fall was so rapid that it could be a fast move. But we've got some trouble ahead in those 2 cigars there to clear. So it's bullish, it's approaching resistance. This one is reasonably significant, this one is weaker. Clearing those 2 will clear the way for a run towards that 2 level. It's a good one to look at. It is bullish. I like it, yeah.
I hope that answers your question.
I hope that helps. Sorry about floundering. Okay, very quickly, let me go to gold. Oh, dear me, gold. This is looking horrible. So we've tumbled any idea that this was a flag pattern is flag pole. The MACD, weekly MACD, is very negative. The RSI is deeply oversold. I agree with that, but it's not pointing upwards, is it? Look how deeply oversold it was here and how much we fell. So until we get any sign of other than it's gone down a lot, that doesn't mean it has to stop going down yet. It's it's hard to maintain this bearish. On the daily chart, indeed, the momentum is increasing in the ADX. The RSI is deeply oversold and flattening. I suppose that might be some short-term comfort to some of the bears, but it's looking terrible. The only thing I would say about it is that compared to silver, silver looks worse. So let's look at the gold-silver ratio here. So this is, when this is going down, this means gold is underperforming silver. And here it's going up a bit now. And so gold is less bad than silver. And this is quite a significant bottoming pattern here that might develop into something more significant. So of 2 bad things, one is not as bad as the other. And so silver is not as bad. It isn't tumbling the way gold is. It's moved into some support areas here. It's sorry, it was meant to be a cigar, not a circle. So we're testing this area here now, which is a good area of support. And then we've got lower ones down here at 22.5. So silver looks worse with 2 clear highs at 29.60. The weekly technicals, there is short-term support at 24.80 for it. But if you want outperformance on the downside, then go for gold. And have I got time to do crude?
Does gold looking horrible make it a good shorting opportunity? That question's from Gregory Amos.
Oh well, yeah. I think those of you who have been on listening to these calls know about my view of gold for quite a while. It's a so the question is it a good time to short it now? No, it's not. A good time to short it would have been here, or indeed here.
Mm-hmm.
Which was the two levels where we got signals. But breaking this low was very significant, catastrophic, really, for it now. So it's very late to join it. Too late, I would say, to join it now. You really, this is not the right moment. Look for some sort of rally, and so we need to see some recovery before joining it short again. So finally, crude oil. What amazing move on crude here, but this is something I want to warn you about. We've surged here. It's fantastic. It's been fantastic. This week we broke through. We gapped over the weekend. We pushed ahead. So far we've pulled back a little bit, but look where we are. We're at a very important multi-year resistance level. We've got these two tops from 2019 in there. So we punched in. We're at the top of this cigar here, which has moved again annoyingly here, and so we're testing that level, but we're at the top of it and testing it, so we might potentially break out of it. All my things have moved annoyingly.
Trevor, sorry, what are we looking at here?
Crude.
Crude, right, gotcha.
Aren't we? Yeah. Brent crude, yeah. And so the RSI extremely high. I mean, I've never seen anything like it before, but not pointing down. So it's been high from here, and yet it's kept on going up. And here now the MACD is positive and getting wider, still getting stronger at this crucial point. Potentially we could break this and go much higher. And on the daily chart here, we touched $70. Of course, that's a very significant. This is the May contract, by the way. Touched $70. That's the lead month. That's what's in people's mind. That's the value of crude oil in many people's mind, the traders' minds. We touched $70. That's a big round number, resistance level. We had gapped over the weekend. We're pulling back currently, but we noted before we had this small bearish divergence. We had the correction. The correction was quite nice, came below 50 here and turned up here. And for me as a swing trader, that's the kind of thing I'm looking for. A pullback of at least 50% in the RSI in a strong uptrend. Now the MACD itself has followed through and we are above the high. And so we're having this nice type of swing out of it here. And this I would hope in my measurements is where we're headed for in this move is I use Fibonacci projection for this. Here, swing back to here. And for me, it's where I think this run will extend to, might go further, go up to 161.8, but it's just part of this journey higher and just another pullback in the journey upwards, and I think we're going higher in this. If we're at that crucial long-term level where we might burst higher because we're tackling those significant moves now. All right, my friends, thanks very much indeed. I'm sorry about
yeah, Trevor, don't worry about it. We did go over a bit again, but it seems to be our usual default mode is to go over by about 10 minutes, I think. Never mind. Okay, well, thank you very much, Trevor, and thank you everyone for attending. Please join us again, same time, same place next week. Don't forget that we'll be posting this webinar to our YouTube channel in a couple of hours or so. Last week we had a bit of a disaster. We posted it late, but this week we'll try and get it out to you as soon as possible. If you came late, it would be perfect for you to go back to our YouTube channel and watch it. And if you do go to our YouTube channel, please don't forget to subscribe and click the bell to get notified. Okay, Trevor, anything else to add?
No, that's fine. Thank you very much for bringing that GBP Australian dollar to my attention, or our attention. Mark, I think it was. That was a good one. We'll keep We'll keep watching that next week and onwards to see how that progresses. Hopefully one day up factor too. But markets are very exciting. It's amazing. I'm staggered at the weakness of gold. I mean, anything I think of fundamentally, I just don't understand it at all. Only I suppose the big shock of the interest rates is the big thing. You can get without risk 1.5% any interest, but with all the other uncertainty around, I don't understand gold plummeting the way it is. But there we are. That's how it is, and thank goodness I'm a technical analyst. Nobody asked me for the fundamental reasons for things. Okay, my friends, thank you very much. May the Trevor be with you. Have a great week. Thanks, Dan.
Next week. Bye bye, everyone. Bye bye.
Bye bye.